Okay guys, hello. Let's make to drive into last two trades. I think it was during the this week on a Wednesday and then on a Friday. So I'll check these two trades. The first one trade is this one. It's been traded on Wednesday this week. At the same time, it was the Wednesday profile reversal. I will recommend you to watch my later on video where I'm speaking about weekly profile, what kind of weekly profile we had. So look at this video. I took the short here. So the first of all, here this is our swing low, right? We went upside. We closed above really strongly, but we left this fair value gap here. It was unable to just fill it and continue higher, right? So you just make a marker structure break. At the same time, you can see how this breaker was formed here. So for me, after the breaker is follow the or the block right here. So just waited to fill this inefficiency. The trade just retrace itself, and then just continue lower. At the same time, I just put it here to know that the price is still extremely bullish because on a higher time frame there was like full market structure break on the H4. So for me, I was still bullish on the higher time frame on H4. I just wanted to see that the price is just go fill here and just retrace back to this 15,980 level here. Why here? Because this is the zone of the H4, and with this there is plenty of inefficiency to be left and probably to be filled. So basically the price reacted here, and it was the second down leg. Then the price found some support on the weekly VWAP and some smooth daily averages and retraced back to the really sweet 705 level on the Fibonacci retracement, which is really good sweet point. So I went short there. You can see here on this chart on the M15 time frame that I just went short here. I need to admit that I think I shorted here when I saw the reaction of my level, because I didn't want to see that if the price just move higher, close higher, move higher, close higher, then we would continue just higher to fill this inefficiency and continue on its bullishness higher, right? So once I saw that the big sellers step in, so I just take my action and short the rally, short relief rally. So yeah, so let's see how it goes. Okay, so as you can see, I'm mapping out how the price swapping, right? Swapping and making lower lows. At this point here, I just saw one thing. When I step it into short here, which is here, and I saw one thing. Okay, so we got the swept. We are under the daily VWAP. We are in a sweet point of the Fibonacci retracement. Then I saw this market structure break on the lower time frame. And look at this. This is really interesting because then the price move again to fill more sellers. but it really kept in touch these triple lows. So all these moves upside, it's just getting the price to fill the stronger sellers, and it's for my perspective, it's before the price is starting really lower time frame big downside move. Quite interesting that my first target for the double lows here was met. Then my second target would be these lows. But the point is that this is really tricky. This is really tricky because, as you can see, this is the day. This is the weekly VWAP. You have a swing low. You have the rejection block, bullish rejection block, and you got here the weekly VWAP. So it's like first, second, and the third layer to get into this discount in a really bullishness array. So the price can really just fill this weekly VWAP and go upside, or just fill this bullish rejection block and go upside, or just taken out this swing low and go upside. It has like so many probabilities to go upside. So this is what I was thinking about, and I would like to get that the price will really quick and just close below the weekly VWAP, and then I would watching how the price behaves down there. So let's see. Okay, so we are filling into this bullish breaker, and you can see that there were not buyers at all at this level, right? There are no buyers, because if there were buyers, the price would react really differently. So I'm thinking, okay, if there is no buyers, so these traders already took profits here or switched their bias and just covering their longs into shorts, because eventually this drops means lack of orders. And look at this, where there was like first sensitive feedback from the traders at this level. So it means and the rejection bullish block and the swing low. At the same time, if there were not orders at all, the price gonna react and go upside. At that time, I would accept it. That is why I did not move with my stop loss at all. I just changed the color. I just did not move with my stop loss at all, and I did not take profits at all. So let's continue watching. So yeah, you can see this is really like some strong buyers stepping in. They just feeling this inefficiency here. They are moving back to the bearish breaker. Why the bearish breaker? Well, because we took these highs, and this last down candle took these highs. We really lack of buyers move downside. So there's going to changing their perspective on the market or its premise. And they have last chance, whoever longed here in this bulk of liquidity, in this resistance, they can just change the orders to the short sides. So eventually I would like to, the best scenario is when you see that the price is keeping and just touching by the wicks, and the most important is just keeping its core value of their bodies inside of this order block, which is this one. There can be any close of the bodies above this order block. So what I want to see right now is that the price just flirting here, moving here, doing its thing, covering from longs to shorts and etc. And the shorts are getting stronger, and then I would like to see the continuation to the downside. So yeah, the price is just, this is the first reaction of the bearish breaker on a lower time frame. Okay, so we are in equilibrium of this bearish breaker. Yeah, so in this point, this gets really interesting. At this point, I notice one thing. Look at this. You got this bearish breaker, and I think the equilibrium is somewhere here. At the same time, you got this lower time frame gap. The price just make equal of all orders, and look at this, how the price just did not move and did not close any of its body above this equilibrium. And this is really fascinating. Then I saw that the price should follow below this fair value gap. If it's really bearish, it's just going to close really quick below this fair value gap and continue lower. Okay, so the price, you can see the price really closed below this fair value gap. It's just basically closing below the weekly VWAP and just taking out the double lows. Sorry, the last swing low. So in my case, this is pretty bearish and it's just going to fail in this area here. I'm also noticing one thing, that look at this M30 candles. When I see this one, you know, like I think it's 31 hour, 1.5, 2 hours, and 2.5 hours. So basically, how does it work in the market is when you have just really small bleeding and then you have one candle really down, so the price is really like, it then can just be just one candle, one green candle, and just pump it, you know, and delete all these low liquidity state run. Another thing is that look at this, all the traders who were trapped here, like who were thinking, okay, the buyers were absorbed in this discount array, and once this candle closed like that, I think so many traders, but so many traders think, oh my gosh, this price is going upside right now. And look at this, how this price just swept again. So it really does not matter is it doji or if it's a full engulfing body or etc. It just does not matter. Okay. So yeah, the price here is just below the last swing low. It's just testing. Support becomes the resistance, and if the support becomes the resistance, this is my time. This is my time to go out. So the next video. the next video. It was really good trade, even though I didn't want to trade because it was the last day of the November. Basically, you don't want to trade first day and the last day of the month, the first and the last day of the end of or the start of the quarter, and also like the first week of each new month. If you are not, I would say, a senior trader with some experiences, because the moves can be sometimes really volatile and can be really like make a mess with your mind. Why? First of all, in our group on a Discord, I was talking like almost 2 days in a row that we're going to this discount. Because there were like triple daily lows. You see here, this note, previous daily low. For me, it's like 3 sell-side days of liquidities. At the same time, even though I anticipated that the price is going lower, I did not take any shorts. I had a lack of focus, and the day was full of the meetings. So I was just first of all, I was just short here in the morning session, and I wanted to see that the price swept here and they just move lower. Basically, what the price did, and this is typical for the price, when I got stop out here, then I knew that they're going to just manipulate with the market before the red news, which actually happened. You look at this M15 time frame and look at this. I went short here. It's just filling, nothing happened, and just, you see these candles, there is no liquidity. There is no liquidity at all. And there is no like strong sellers at all. Everybody waited for the red news. Everybody. And once the red news has occurred, I think it was 2:30 New York time. So we taken out the buy side liquidity, market structure break here, and I wanted to go and short here, but it didn't happen. The price just really, it was just enough to just test at this level by really small wick during the opening of the New York of the session, and then it just followed really aggressive, ready for short sellers. It was really fascinating to looking how quick is it, and also look at the M15. Basically, the price was so bearishness that it wasn't really enough to go upper here and fell into my shorts. It was just enough here, confluence with the big figure of the 16,000, touching with some weekly VWAP, I think, and then just going and fill to the weekly weekly gap. As you noticed, when I was short here, so I was attacking this level. It was confluence with the Fibonacci retracement, and also it was confluence here with the liquidity of the daily lows. So I wanted to get the short in a big way, because here was a plenty of liquidity who can like cover my shorts. And it didn't happen, so it's okay. Funny thing was that on a Friday night, I think it was the PM session. Last hour reversal on ES and the Nasdaq. S&P and its structure, I will show you later, was much more bullishness than it was on a Nasdaq. And in this trade, the S&P 500 really saved my day, especially this trade. So I went short here. I set up my hard stop hard stop, I think it was somewhere here, and the soft stop was under here as this emoji. Would I put it there? I got almost stop out. I'm admitting it. And I switched to discretionary trading because I discovered for my mind is much better than to have just only one stop loss. For me, it's much better to have two stop loss, which one is the soft stop loss and the second one is hard stop loss. And I know that for a hard stop loss, I need to take it even if somebody just shoot me. I need to take it. There is no way I won't take it. I must take it. So, and then I'm completely fine with it because I know that the soft stop didn't help and the hard stop, I need to take it. There is no way I would not. So yes, look at the structure. Look at this structure, really, really amazing one. We basically sold off this one. We started to building some liquidity in a really discount array. We got H4 of the order block, but the most important is we got the weekly gap, which is confluence on a daily. So for me, like all the professional and big players who were shorting last 3 days are going to take profits here. So there's going to be some kind of relief, right? Some kind of relief because they're pairing their short orders with the longs, or the hedgers are going hedge their long orders because this is the reasonable in this area to hedge your positions if you are an enormous big player, if you are a hedger, or you're going to take the profits. You're going to take profits, you're going to what? Unload your shorts covering with the buys. So for me, for the small player in this market, I wanted to see lower time frame relief, back to this VWAP, eventually take out those liquidity here and just going upside here. So I map out this level here. I map out this level here because I think if the price went here, there's going to be more sellers on the higher time frame and the price can continue lower to stay some kind of time here and jumping around. So let's look how the price reacted here. So yeah, so what time was it? I think it was, yeah, I think it was 7:30, 7:45 once the big players came into the PM session again. And you can see how the price really swapped this level, make market structure break. I really like how the price closed really strong about this level. I like it. So then the price, really interesting, it just left these highs untouched. So for me at this point is, okay, if the price left this high untouched with this fair value gap, so it means the price going lower because the some resistance level, as the other traders would see it, gonna short it here, and then they will just try to attack this level or eventually this level again. From my point of view, if they left the fair value gap, this double lows, price going back to discount, I wanted to see that the price is just going just to this, eventually just fill by wick this inefficiency here, and it's gonna move higher. But I was fine with it to flirt with this level again. I was okay with it. And I would welcome it. It's healthy. So yeah, this is the, I think, 8 p.m. or 9 p.m. here. I'm up on my level. Here you can see the price did not find any orders at all. There was no orders for the buyers. Really interesting. So okay, I would say to I said to myself, okay, if there's no buyers at this level, where the buyers are. So eventually I need to left my initial idea to have really tight stop loss just here. So I move to my hard stop loss again, below the weekly gap, below the weekly gap. I need to highlight it, below the weekly gap, my hard stop loss. So I knew if the price is going to visit there again, we're going to close the weekly really bad. So this is where I would just say, okay, I was wrong on my premise. I noticed market structure break on M30, swept this low. I put my Fibonacci in the standard way. So in my thinking was okay, because this is I wanted to see. I just wanted to see that the price you see going to fill this level here really quickly and go above. So for me, it was clear that the price going to and take out these longers on this bullish breaker again. So in my thinking was okay, I would like to see quick swept, go above and just continue higher. At the same time, I will show you once we're going to click on S&P. So yeah, there is no bullishness. We just swapped the bullish order block. This Fibonacci is from the M30. Okay, and this time I was like, what is going on? Are we really going to test the low time frame reversal from the close afternoon session? So at this time, I just changed to the S&P 500 mini futures. I wanted to double check what is going on with its similar pair across the indices. And for me, there's a much better structure. Because look at this. Notice one thing. In the Nasdaq future technology, you got really downside move. And it's much larger move than was in S&P. Also, I noticed one thing. S&P did not sweep the daily low. Only I think one previous day, but it kept untouched 2 other days. So for me, okay, this is the SMT. SMT, it means there's a divergence. So it's one more odd in my favor. So I would say, okay, this is the swept, market structure break, retest of the weekly VWAP and etc. Retest of, here was already the retest of this bearish breaker, so I don't count it. So we got like one liquidity and the second liquidity confluence with the Fibonacci retracements. So I was telling myself, I like this kind of structure. I like how the price did not have like enormous sell-off like was it in the Nasdaq. So just okay, Adam, I would stay in my long in the Nasdaq, and I would like to see quick rise. And if the S&P would rally, then the Nasdaq would rally also, and all the shorters would fuck up. So for me, the first level is here. The second level is here, about this weekly VWAP. The price needs to find some support, close pretty quickly, just take out pretty quickly these guys, and whoever just didn't take profits, they're gonna selling here, means that the price will really quick upside with the upside move. At the same time, just imagine, we got like 4 hours of selling. 4 hours of selling. So it means that the traders who did not take profits here were just really like in a bad situations. Just imagine that you are holding here the swing short, and then the price just going to close in the last hour in this area. I think you would be like, what the hell is going on? And you close your positions, which is good in our terms because we went long. So yeah, so let's check it out. Okay. So yeah, you can see like clearly that there is like strong buyers, or the people covering their shorts when the buys orders. This is really like you could see it on the price action. Yeah, so you see, this is fascinating. Like, look at this. This is indicated me once the price closed here, about this body here, and close like this, and indicates that the next move they attacked is in this position in 4,562. Eventually they close about this, and this is the game changer. Why? Because the price is about the weekly and the daily VWAP with the full reversal. So this time it was like odds in my favor, what I was waiting for, and I was feeling that the price is moving here, taking these highs, while the Nasdaq is going to attack the first trouble area here, and the second trouble area, I would say, for my feeling was here, unable to get there because it was already too late. But I would be really happy if the price gonna visit this level, and this is my second trouble area. So my KU was okay. We need to close, and this is M15 time frame. We need to close about this level, and the second or the third M15 gonna close here. I'm gonna close my positions or move my stop loss to this level to be in profit, and then I would like to see what the price is doing and dealing with orders in this second trouble area. Okay, we got retesting. You see? This is like fascinating to see. The price really didn't even brief the traders who were on the opposite sides to cancel their orders or just reestablish their position or the premise. Even brief. He was so quick, amazing. Okay. So I'm moving with my stop loss in the profit. At the same times, if next candle is opening, going to trade and fill this gap, I'm okay with it. Price shouldn't visit this area because it's already visited again. And I would like to see the price move up upside and flirting or dealing with new orders in the second trouble area. Okay, as you can see, this is the moment what I was waiting for. We just take out of the previous high from the New York AM session. At the same time, Nasdaq was unable to get from this point, even though I was thinking they going really to swap this this recent swing high and fill this gap, it was unable, and it's completely okay. When I saw this another SMT divergence, I was just okay, I'm closing my longs because it's enough for the price. It completely did what I was anticipated, and I'm totally fine with it. I'm totally happy, and I closed this trade with the 4.5% of the profit, and it was so beautiful session for me. So it was really good Friday.